Hello there everyone and welcome to this episode of the Bizcast. Today we're going to be focusing on an introduction to sales and trading. So I'm joined with Yonni Kobrin, who is Head of Equities in the Bristol Trading Society and also interned at Millennium Management this summer in the index rebalancing team.
Yeah.
And next summer he'll be interning in sales and trading at Morgan Stanley. So Yonni, how are we today?
Yeah, feeling really good, excited for the episode with this, and yeah.
So firstly, can you outline the structure and function of the sales and trading division?
Yeah, sure. So, as by the name, there's obviously a sales department and a trading department, which kind of work hand in hand with each other. So the idea is that the sales desks will be selling the products that the trading and services that the trading desks are providing. So the sales desks are talking to clients, talking to hedge funds, talking to the buy side, and basically selling the product that the traders are creating for the bank, and the traders are actually executing the trades. So they have their trading licenses. They're doing what they're told by the salesman. That's basically the general structure.
Also, can you explain the sort of different desks within sales and trading and maybe the different asset classes?
Yeah. So I mean, there's such a wide variety of desks at a bank these days. In a general level, there'll be equities desks, which are like stocks of a company. There'll be fixed income. There'll be commodities traders, FX traders, and new desks are appearing all the time, being created. Some they're getting rid of. There'll also be algo traders, creating algorithms for the trades. There's so many basically. I remember when I was at Morgan Stanley doing the spring week, they were talking about equity derivative desks and derivatives, and there's just so many combinations and different ones. So, yeah.
Are there certain asset classes such desks that maybe are more suited towards certain individuals, so some that are like more mathsy and some that are more sort of like macro based?
Yeah, I think to the best of what I know, to the best of my knowledge, I think that derivatives very mathsy. So people doing quant degrees probably more suited for derivative desks, equity derivatives, like things that are using like mathematical models to make their trades, and more algo trading as well.
Right.
I think macro, people that have a good understanding of macro events, people that are doing economics, degrees like that, and those kind of backgrounds, probably better suited to equities, understanding how like the macro of the whole market is going to impact like US equities, for example.
So just out of interest, Yonni, what was it that drew you to sales and trading in particular, rather than like a different sort of area of finance?
So actually, I started uni more interested in investment banking, and when I started doing the work, I had some friends that were also doing sales and trading, and I kind of just compared the actual work itself, and I just think that I prefer analysing markets and their trends, and I kind of like the fast-paced environment of the trading floor. If you walk into the trading floor at a bank, everything's going on. Like no one can give you attention. There's just so much going on. I love that fast-paced, hectic nature. And I just want to go there, get involved early in the morning. Also, something about getting up so early in the morning. If anyone doesn't know, like traders and sales and trading division, like people are getting into their desks at 6:30 in the morning, 7 in the morning. It's early mornings.
It's like 9.
Investment bankers are like 9:30, but then they're staying till really late, and I'm done by 5 o'clock.
Put your feet up in the evening.
Yeah, it's true. But I just like the whole. I like the whole idea. I'm pretty mathsy. I'm doing a maths degree, so it's the kind of thing that I'm just much more interested in. I'll optionally go on my phone to check what's happening in the market, but I won't optionally check which deals are being made.
So there are different sorts of firms you can work at as a trader, am I right in thinking? So what's the difference between working at somewhere like, I don't know, Morgan Stanley or a Goldman Sachs versus an Optiva or like a Jane Street?
Yeah, so I haven't actually interned at Jane Street or Optiva, but I've obviously interned at Millennium, and like what I picked up is that, I mean, there's buy side and sell side. So if anyone that doesn't know, like the buy side are making the decisions about what trades they want to do, and they've got some kind of strategy. And the banks, so the investment banks, Morgan Stanley, Goldman Sachs, JP Morgan, all of them, they'll have a trading division which actually facilitates the trades. So the idea is that the buy side will come in, want to execute a trade, communicate with the bank will then execute that trade for them and give it back to the buy side, so the trade will be executed. And so the buy side will have executed their trade, and the investment bank, Morgan Stanley, Goldman Sachs, will have taken a little bit of profit from trading fees, basically, and that's like the structure of the two. So if you're actually working at a bank, you're providing a service to clients and actually executing trades for someone else. Back in the day, I know that there was a lot more proprietary trading, which is where the investment banks were actually doing part of the trades themselves in the same sense of the buy side. But that's kind of changed now, I think.
So they use soft deposits from, I don't know, the retail banking division, and then would put those towards...
Exactly.
Got you.
Exactly.
Okay.
But I think that is kind of fizzled out, or at least there's a tiny amount of that at banks these days.
Is this like maybe a skill set that more lends itself towards working at one of the proprietary trading firms versus one of the banks? Like, which kind of person do you think would thrive in each one?
I think that you're working more in a team at a bank. I think. I'm not 100% sure again, but I think that you've got to be pretty good at coding to work at those top like quant firms like Jane Street, Optiva. They'll want you to be very, very quantitative, very, very capable of coding. And I think that those really high technical skills aren't as required at a bank. Whereas if you want to work at one of these banks, you've got to be obviously a very smart person. You don't necessarily need to be able to code. You don't need to be able to solve differential equations, which I think you need to the kind of thing you need to do at some of those
differential equations. Oh wow!
just as an example.
I
don't know if that specifically, but just like some things you might need to do at these quant firms.
So you probably find the people working at those quant firms would have been your engineering students, your maths students, whereas at a bank you might have people from a broader range of disciplines.
Yeah, that's what I picked up. But again, I think the climate is changing. I think that more people are working at different places these days. So what it will look like in 5-10 years, who knows?
Yeah. Also, Yonni, so can you run through us what a typical day looks like as a trader and what sort of tasks you might be working on as like an intern or like an analyst?
Yeah. So I think that certainly working at a bank, your typical day would probably look like getting into the office at least an hour or an hour and a half before the market opens, kind of digesting all the information of what happened overnight, kind of having team meetings, discussing what's going to happen for the day, and then market opens, you're at your desk until market closes, and that's basically you're not really leaving your desk. It's very, very intense, and you're just monitoring the market, you're executing the trades for clients as they come in, you're speaking with your team, and that's basically the structure. So you're essentially you're so necessary for your team. You're just you're working all day long, but then as soon as the market closes, that's it. You kind of have a short debrief and then you go home. So it's very kind of intense for about market hours, 8-9 hours, and then that's it.
What sort of person do you think will thrive in sales and trading?
So I'll split it up into sales and then trading. So I guess salespeople, they'll be much better people's persons. I don't know the phrase people's or whatever it is. Like they're much better working with people. They'll have client relationships which are essential to the firm basically. They might meet with clients regularly. They'll be contacting. If you ever see a salesperson's desk, the computer screen, they'll have just rows and rows of chats with different clients on Bloomberg. So they've got to maintain these relationships and occasionally see them in person and really be able to they're selling a product, so they've got to have those soft skills to be able to speak to people. A trader probably a little bit different. They're actually executing the trade, so they'll be probably a bit quicker thinking on their feet, able to follow tasks well, routine tasks, and make decisions with little information basically on the spot. So that's kind of the difference between the two types of people.
I know a lot of people maybe go into sales and trading for the exit opportunities. So what are they like really?
Firstly, I think the sales and trading exit opportunities are a little bit worse than investment banking. That's definitely true. I think you have more opportunities as an investment banker, but you still do have options in the sales and trading department. As a salesperson, probably going into any kind of sales role, obviously, but also if you want to stay in finance, investor relations, perhaps. I can't think of too many off the top of my head, but I know there's several you can do in finance. But in general, you'll have a lot of skills that you've developed as a salesperson at a bank, and then traders. I mean, not only you could probably go into so many different roles, but a lot of people try and make their way to a hedge fund as a trader there. and that's a pretty common route for people to go. Also, people might just stay at a bank for a while, and just stay their life at a bank, which is completely fine, and like make their way to become very senior there, and become very successful at a bank. So
would you say the work-life balance at a bank versus a hedge fund's a little bit better?
I think it's probably like if you're trading at a bank versus a hedge fund, I think probably pretty similar.
Similar, okay.
Maybe you're doing a tiny bit more at a bank, just because you're the service provider. So I guess you have to like put in a tiny bit more time and effort.
Right. Okay.
Yeah.
Great. Thank you, Yonni.
Of course.
Right. Thank you very much for kind of coming today, Yonni. I'm sure we've all kind of learnt a lot about career in sales and trading. So yeah, thank you very much, and good luck at Morgan Stanley next summer.
Thank you. Thanks for having me, and enjoy the rest of the podcast.